Good evening, everybody. On behalf of Bodal Chemicals Limited, I extend very warm welcome to everyone for joining us on today's call. I am Mayur Padya, CFO of the company. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchange and our company's website. We will give you a quick overview of the recent developments in the chemical industry, and then we'll walk through the operational and financial performance for Q1 FY24. Inflation in major economies continue to be higher level than the normal, leading to lower purchasing power with the mass, which results in lower consumption at end user industry and lower demand for our industry. Uncertainty for end of war between Russia and Ukraine further decelerated demand scenario for chemical industry. Inventory correction and slow export for textile, leather and paper, leading to subdued performance of dyestuff over the last few quarters. The two major markets, the United States and the European market, have been slow for more than a year now, owing to multiple headwinds from rising inflation to uncertain geopolitical scenario. Slowdown in China impacting the domestic demand in China, resulting in excess volume originating from China. At the world level, most aggressive interest rates hike causing inflation condition to tighten and necessary trend continue impacting demand adversely. Industry expects this weakness to continue in the short run, and gradual recovery is expected from second half of FY24. We are India's largest integrated manufacturer of dyestuff and dye intermediates and hold a meaningful market share in the world. In today's environment, where Indian suppliers are emerging as preferred partner globally, we have been able to hold our leadership position. Coming straight to operational performance, overall business performance for Q1 FY24 has been weak, as the company's total revenue stood at rupees 341 crore, a degrowth of 26.9%. due to decline in prices of raw material as well as finished goods, and margin diminution is on account of decline in overall demand. The sluggish demand of end-use industry, which has impacted better volume and selling prices, which is not allowing industry player to pass on the increase in input cost to end customers. Coming to dye intermediates, at present, dye intermediates like H-acid and vinyl sulfone pricing has been at lower level, putting strain on industry players. For Q1 FY24, total revenue from dye intermediates stood at 93 crore. H-acid and vinyl sulfone prices were near rupees 426 and rupees 230 per kilogram in Q1 FY24 respectively. Being an integrated dyestuff manufacturer, we produce major dye intermediate products, and over 40% of this intermediates capacity is captively consumed, resulting in a cost advantage for our dyestuff products. The balanced capacity of dye intermediate is served in both domestic as well as global market. Many dye intermediate manufacturers in India are still under pressure due to slow demand. Industry expects this weakness to continue in short term, and gradual recovery may be expected from second half of Q4 24. Coming to our dyestuff, end application industries like textile, leather, paper and other dyestuff consuming industries have not performed well during the last few quarters. All leading textile companies are facing global headwinds which have curtailed the outlook for dyestuff products. The dyestuff business for Q1 FY24 stood at rupees 115 crore. Coming to basic chemicals, about 50% of our basic chemical is captively used for dye intermediates. Our overall basic chemicals contributed around 35 crore in Q1 FY24. Coming to chlor-alkali business, post-upgradation capex in Q1 FY24, the chlor-alkali business has performed reasonably well in terms of production, achieved 90% growth in volume year-on-year basis. However, due to adverse market condition of chlor-alkali industry, revenue stood at rupees 70 crore and reported degrowth by 22%, leading to a substantial reduction in price in both domestic and international market. Recessionary trend continue impacting demand. This factor continue to affect sentiments and therefore prices also. Coming to benzene derivatives, as highlighted in earlier call also, our main goal is to replace import and capture business in the pharma, chemical and agrochemical market where PNCB and ONCB are used. We are installing the capacity of 63,000 metric ton per annum for benzene derivatives. Saikha Greenfield project is progressing well and it is expected to start a trial run from Q3 FY24. We have been moving up the value chain and working relentlessly towards diversifying the business from our core dyestuff and dye intermediate business to other specialty chemical products like benzene derivatives. Once we have decent visibility of demand for our product portfolio and a new business site is stabilized, we will restart the sulfuric acid project. While the global growth and demand is impacted, growth momentum in India is strong. We will expect chlor-alkali business will contribute meaningful business in the coming years on back of technology upgradation. We foresee demand for caustic soda to remain healthy from FMCG, textile and paper industry. Since very few players have a presence in North India, we will have a competitive edge to a certain extent. Manufacturer and exporter in India are having a challenging time managing the overhead cost. Over the year, chemical industry has seen a transformation. Management is taking measures in terms of scale, cost and integration that will help to sail through in this tough time. The overall performance of the company has been subdued for the quarter gone by. Our standalone performance for Q1 FY24 is as follows. Total revenue for Q1 FY24 stood at rupees 329.40 crore. EBITDA stood at 27.23 crore. Net profit for the quarter stood at rupees 1.07 crore. Our consolidated performance for Q1 FY24 is as follows. Total revenue stood at rupees 341.27 crore for Q1 FY24. EBITDA stood at 30.98 crore with a margin of 9.1 crore. Net profit for the quarter stood at 2.21 crore for Q1 FY24. Performance of the key subsidiaries was subdued except for Senerboya. In recent current unfavorable scenario and even after recent earthquake in Turkey, Senerboya has performed well. It has reported a total income of 11 crore and reported a profit of 1.19 crore. Performance of other subsidiaries has been lower than expected due to soft demand. In a medium to long-term view, this subsidiary will bring meaningful business. However, in short run, we are expecting a modest performance. Segment-wise performance on consolidated basis for Q1 FY24 are as follows. Dyestuff revenue stood at 115 crore. Dye intermediate at 93 crore, basic chemical 35 crore, chlor-alkali stood at 70 crore. Total production volume on a standalone basis for Q1 FY24 are as follows. Dyestuff reported 3,473 metric ton of production. Dye intermediates reported 4,802 metric ton. Basic chemical stood at 56,650 metric ton. And chlor-alkali caustic soda production stood at 19,506 metric ton. With this, I conclude the presentation and open the floor for further discussion and question and answer.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Aditya Khetan from AK Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, my first question was when you say that demand is remaining subdued. But, sir, when we look at your quarter-on-quarter volumes, like dyestuffs have reported 25% jump on quarter-on-quarter basis. Even dye intermediates volumes have been almost flattish. So, despite subdued demand, your volumes are picking up. So, I understand you are talking onto the price because China is aggressively dumping into India, so that could impact the price. But your volumes are picking up. So, how should one look at these numbers then?
Yeah, see, whatever you have pointed out is correct. Particularly Q1 FY23 and Q1 FY24 when we compare. In Q1 FY23, we had a good orders on hand with good prices. So during the corresponding last year's quarter, industry has started performing weak, but because of the good sales price, we have done better in that particular quarter. So when we compare the revenue figure from Q1 FY23 to Q1 FY24, the prices has been down, but volumes, as you have mentioned, has picked up. For production, the data what we have shared is of production data and not of a sales quantity. So during Q1 FY23, there was a better sales number as well as sales price. That's why when we compare it with Q1 FY24, it looks like that revenue is down. And volume-wise, there is a somewhat better we have done as far as production is concerned.
Okay.
I have addressed your question.
Yes. Sir, when I say that 25% jump in your dyestuffs volumes, but your dye intermediate volumes have not gone up. So what we understand that dye intermediate is used to make dyestuffs. So when your raw material is remaining flattish, how come your finished product like volumes have been jumped at a higher pace?
It is very much possible. So it's not that whatever we produce, that much is only utilized. There is an older stock as well as some portion we are required to get from outside. So it is very much possible that we have used our inventory more in a captive consumption than what we have sold to outsiders. So this is a production number. So major portion has been used for captive consumption and sales numbers are lower.
Okay. And sir, onto the vinyl sulfone and H acid, so China is the largest player into these segments and they are aggressively dumping into India. So now prices are at 2 to 3 year low. So how you see these things this can improve materially from here on, or you see this to remain at these levels only for a couple of quarters And also, sir, if you can share the import figures if you have of H acid and vinyl sulfone. Any ballpark number if you can give on that.
Sure. See, when we compare H acid and vinyl sulfone with China, for vinyl sulfone, Indian capacity and Chinese capacity are more or less similar. But in H acid, China's capacity is much higher than India's capacity. And China's dumping was there earlier, before about 6 months or so, when prices of basic chemicals were at higher level in India, but they were at lower level in China. So their cost of production at about before 6 months was much lower than Indian manufacturers' cost of production, and hence they were able to dump. But presently some consignments are coming, but not in a big number. I don't have the import data, but present cost of production for both the countries are more or less similar. So prices of basic chemicals like sulfur and caustic, aniline oil, which were at very higher level before about 6 to 9 months, now they have corrected, and prices over there and in India are more or less same. So cost of production is also similar. So there is now a level playing field, and we are not expecting much dumping as far as this product are concerned in India. Another thing, when Bodal has performed more or less similar compared to last 2 quarters, is because of somewhat betterment has happened in dye intermediate and dye stuff space. Other segment like chloralkali, that has performed well earlier, but during this quarter prices were very low. So that sector has not performed well, but because dye intermediate and dye stuff has performed little bit better compared to earlier, where we have been making some losses, we could do better. And what we are expecting that this scenario may remain at least 2-3 months, and after that every industry player are now hoping that from second half of current year, some gradual improvement should be there.
Okay. Sir, any guidance on full year margins, EBITDA margins for FY24?
It's difficult to say, but we can say second quarter will be also under pressure. But from third and fourth quarter, how much improvement takes place, on that basis we can show. So minimum from this 4 time we can definitely consider, but somewhat better will definitely happen in Q3 and Q4. That is what we are expecting. At the same time, there will be some internal things what we are working that will boost in Q3 and Q4. They are like what I have mentioned in our speech also, that we are working on some scale and other things. Like, see, we have 12 units, manufacturing sites. Out of this, 5-6 sites are very important, and balanced site like 4 sites in Ahmedabad, another 2 small sites in Padra. They are profitable when we have a full-fledged demand. But since last 1 year and so, demand is under pressure. So operating all these sites is not a meaningful decision for the company. So we are considering to close some of the sites, and we have stopped some of the, considering to stop production wherever the overhead cost is very high, but we are not generating much of the margin. So that study we are internally doing, and maybe some fruit we will getting from say next quarter or so. So by that we will able to save a handsome, it can be up to 2 crore of overhead reduction every month. So this we are internally working. At the same time, we are eligible for some incentive at Punjab. So that we have applied, but we have yet not got, and that we have not yet considered in our income. So that incentive itself is in the range of about 18 to 20 crore per annum, and that we are eligible from November 22. So that also we will get in a quarter 1 or 2 from now. So these are the 2-3 areas which will definitely impact the company's profitability, even if the outer parameters remain same. At the same time, we are expecting some improvement in the outer parameter, but internally we are working, and that will give a positive result in Q3 and Q4 to some extent.
Got it. So just one last question from my side. Sir, when we look at your numbers, so in this quarter, there was a very big jump into the gross margins. Like none of the chemical companies in this quarter have reported such steep jump in gross margins, which you have reported. So I was very curious to know what is the reason, like, because all the raw materials, I believe, so considering the subdued demand also, you should have also felt the pain, but your gross margins are higher. And what is the reason for higher other expense also, like it is upwards of around 10 to 15 crore in this quarter? So,
yeah. See, for the company, as I mentioned, we are into various sectors, and some prices of basic chemicals that has come down. So we were able to source some of the raw materials like sulfur, which is the main raw material for sulfuric acid. We have done some agreements with like Reliance Industries. So we are able to source some of the product at a cheaper price compared to what other industry players could have sourced. So that has contributed to a big way for the company. And that is where we could do better in terms of dye intermediate and dye stuff. If chlor-alkali business has done similar to the earlier quarter, our numbers would have been much better than what we have shown in this quarter. So this is the answer for your first question. And for other expense things, see, it's a very big area. It includes many heads. So to comment upfront is difficult for me. So we can connect separately to understand the things.
Got it, sir.
Yeah.
Mr. Ketan, are you done with your question?
Yes.
Thank you. Participants, if you wish to ask a question, you may please press star in 1. A reminder to the participants, anyone wishing to ask a question may please press star in 1. Participants, if you wish to ask a question, you may please press star in 1. So we don't have any more questions from the participants.
Yeah.
So would you like to add any closing remarks?
No, nothing much. As I mentioned, time is tough for the company, for the industry. But what we have seen in this long journey of 30 plus years, that such time remains there for 1 or 2 years. But then automatic demand comes up. So presently, the all pipeline of the stocks for our end-use industry is more or less empty. So whenever some demand starts coming from a developed market, then immediately good results will be there as far as demand is concerned. And that will definitely help the company to do better. Yeah, this is what I would like to say. And thank you very much for joining our call. And we conclude the call and would like to thank everyone. And anyone's question, if remain unanswered or couldn't ask, they can connect us separately. Thank you.
Thank you, members of the management team. Ladies and